2026 is just a few days away, so here's my exact stock market plan heading into the new year. So I want to cover a few things in this video. The first one being my portfolio, each individual position I own, and my plans for the new year with each of those stocks. So I'm talking whether I think these stocks are a buy, a hold, a sell, where I think the prices could be this next year. And then the second thing I want to talk about are the stocks on my watch list. So first, let's get into my portfolio. So here I own 7 stocks: Adobe, Duolingo, ASML, Google, Amazon, Nike, and QQQM. Now, this is not my only portfolio, but this is the only portfolio I invest in now. The first one I created was when I first started investing. This one I created back in June when I started posting, and it was a way for me to build this portfolio with you guys, showcase everything I'm doing, and kind of start fresh. So most of my money is in this portfolio. You have a few bigger positions in the other portfolio like Amazon and Nike. So yes, they represent a little less of this portfolio when in reality, I do own a little more. But besides that, this paints the overall picture of my investing portfolio. So let's get into my first stock, Adobe. This takes up about 23% of my portfolio, and I'm up just over 3% on the stock. Now I view Adobe as a strong long-term buy. A lot of that comes with the fact that I think it is wildly sold off because of AI fears. This is a company trading at a 15.4 PE ratio. And when we look at the numbers, this is a company that has continued to grow year in and year out. 5 years ago, revenue was at $13.6 billion. Today is at $23.7 billion. Their growth continues to happen. They're still growing at least 10% yearly. And that is all while over the past 5 years, the stock price is down basically 30%. Revenue isn't the only thing telling the picture. Free cash flow continues to grow at nearly $10 billion now. EPS is growing, net income, EBITDA. The one that is very impressive is their shares outstanding total dropped about 6% over the past year. They're on a $25 billion share buyback program right now. Adobe is one of the companies that I talk about a lot, and it's my probably highest conviction stock right now, and it's represented in my portfolio with it being my biggest position. But I also have a few other videos that I recommend you guys checking out, especially this one right here. I'm gonna put it up in this corner for you to watch, but it's 26 minutes of me going over why the bear cases for Adobe, especially the AI threats and the competition factors, don't make much sense. Now, I feel like I did a very good job breaking that down, and I've gotten good feedback. So if you're generally curious about why this is my highest conviction stock, I check it out. But what do I expect? Like I said, this is a strong buy right now. I actually bought some more today, and I want to make this position over 30% of my portfolio. Now, yes, that's a lot, but something you need to remember about me is I'm young, and my portfolio size isn't that big because I'm young. Because of that, I could take on a little more added risk and have higher position sizes in stocks I have high conviction in. Now, obviously, I believe this will work out very well, but even if it doesn't, I will recover. I have 40 plus years in this market, and I have a long-term time horizon, so I'm okay taking a little more risk in position sizing to put it into stocks I truly believe in. Now, I think with continued growth and Adobe continuing to show that AI is not a threat, it's an accelerant, we could see the stock price hit 400 to 450 to 500 this year alone. I believe the recovery will happen, and it will happen fast. It might just take a few more months for the market to realize this company is not dead. Now, if we're looking for fair value right now, the one tool I want to use is Forecaster and use their discounted cash flow calculator. Right now, they have fair value at $780 a share for Adobe. That is 121% below fair value. If the narrative, if the numbers, if the fair value doesn't scream incredibly undervalued, I don't know what else will. Again, this is a stock I believe in heavily. This is a stock I'm buying now, and I plan to keep building up my position even when the stock is in the 400s, because the stock price is just completely dislocated from reality. Now let's talk about my second biggest stock, Duolingo. This takes up 22% of my portfolio, and it is down about 15%. This is by far my biggest loser right now. But overall, that does not worry me. Duolingo is by far my most long-term stock I own. And right now, I give it a long-term buy and hold signal. The last video I just made was a Duolingo deep dive. So if you want to check that out, I explained my entire thesis in 13 minutes. But with Duolingo, this is another one that's been sold off heavily. We look year to date, down 44%. Over the past 6 months, down 55%. So this stock is extremely sold off. Now, the main factor for that comes from a few things. One is they had a valuation problem back earlier this year. The stock hit $540 a share, and valuation during that time, the PE ratio was at 263. So valuation was very high. Even for a growth company, you understand why the company sells it off. It just had a big run. People want to take their gains and leave it at that. Another primary reason for the sell-off is a change in leadership focus. So the stock after quarter three earnings plummeted, and that was mainly because of a guidance change. They are guiding for less revenue in quarter four than expected. And as a growth stock, a company you're paying a premium for, you want to see growth continued. So when leadership is telling you growth is going to slow down, people panic and sell. Well, the number one reason this happened, the reason why they're guiding for less revenue, is because they were making a shift. Leadership made a clear shift from focusing on short-term monetization, so focusing less on getting more paid subscribers, and they're focusing on two things. They're focusing on user growth, so bringing in more users, more daily active users, monthly active users, that conversion rate. And they're also focusing on teaching better quality. Now, for a stock that I'm looking 5 to 10 years down the road, this is exactly what I want to happen. I want leadership to focus on the long term, and I want the stock price to drop. Because this is a long-term buy and hold, I'm slowly building up my position so I could capitalize on this opportunity years down the road. I understand, especially this company being a smaller company under $10 billion, it is going to be volatile. In the short term, this stock will react off of news, and I can't predict where this price is going to be in 3 to 6 months. Now, I think years down the road, this will be the company to change the outdated education system. Now, I explained that all in my last video, but the biggest thing with Duolingo is they are not just a gamified learning app. They are not just teaching languages in a fun way. They are now teaching multiple subjects. They're teaching math, they're teaching music, and they're teaching chess, and they're becoming highly successful with those other ones, with millions of users logging in monthly. Now, yes, right now, the product of Duolingo is not capable of changing the education system. But there's one factor we need to remember, is that AI is completely transforming how Duolingo works. It took them 12 years to build 100 courses. Last year alone with AI, they were able to build 148 courses. Now, the second thing is anytime someone completes a lesson, whether they succeed, make mistakes, just click the screen, however they interact with the lesson, Duolingo is collecting data. This is personalized learning behavior data that only Duolingo has. No big tech has this, no LLM has this, ChatGPT doesn't have this. It doesn't matter. Only Duolingo has this. So they take that data, that personalized learning behavior data, and they put it into their AI models. These AI models create better lessons, these more personalized lessons, ways to keep you coming back addicted to the app. These better lessons bring in more users, and those more users bring in more data. That data goes back to the AI models, and it continues to go around. Now, my long-term thesis lies in the fact that I believe Duolingo will become a personalized AI tutor for billions around the world. Now, that will not happen overnight. That will not happen in 1 to 2 years. It might take 5 years. It might take 10 years. But even in the short term, with the growth of numbers, with revenue continuing to grow exponentially, with them now having over 50 million daily active users and 135 monthly active users, this company is doing incredibly well. Another impressive thing is free cash flow. Free cash flow continues to rise each and every quarter, growing at 54% year over year. Now, when we look at position sizing, yes, Duolingo takes up a lot of my portfolio. A lot of that comes with that drop we saw after last quarter, this dip right here. I wanted to capitalize heavily on this discount. Once the stock rises, do I think my buying will slow down? Yes, and this stock might drop to maybe 15% of my portfolio. But right now, at the current price, I am capitalizing on this opportunity for the long term. I don't expect this to turn around fast. This is going to take multiple years. But I love where this company is positioning themselves to take over education. Now, my third position is ASML, taking up 18% of my portfolio and 43% gains on the year. Now, when I say this, I'm not exaggerating. ASML has the widest moat in the entire market. No one can replicate what they do, and they have zero competition. If you don't understand what ASML does, they create EUV lithography machines. These machines create microscopic designs on AI chips, allowing these chips to do what they do. They quite literally are the only company in the world capable of making these machines. For reference, this is what these machines look like, and they are said to be the most complex machines on earth. Now, what people don't realize is every time an NVIDIA makes a chip, AMD, a Google, whoever's making these chips, they have to use an ASML machine. Everyone has to use an ASML machine. Every single chip being made goes through one of those machines. They are an incredible company, a once-in-a-lifetime company, and it's one that's been very successful for me. Now, when we look at stock price, this is one up 50% this year. Like I said, my performance has been very solid, up 43% this year, and I expect the stock to continue to grow. Now, right now, I view it as a hold/buy on dips, and that mainly comes from one, the rise it's been on, and two, the other opportunities in the market, like in Adobe. Adobe's my number one stock I'm buying, but anytime I see any sort of dip in this company, I will be adding to my position. Now on to my fourth stock, Google, taking up 17.5% of my portfolio, up a whopping 77% this year. Google is another one of those companies that was sold off because of AI fears. Everyone was saying that ChatGPT is taking over Google search. No one is going to ever need Google search. It is far outdated, and this company's gonna die. Now, during that time, we saw a big fall off, and then going into the April lows, the tariff lows, this stock dropped all the way to $144 a share. Since then, it has over doubled. Google has continued to show the market that they are not dying whatsoever. Now, this was another one that when I was buying it, it had very negative sentiment around it. This is one of those stocks you were buying and buying and buying and waiting for it to go up, and everyone's telling you the company's dead. And you just had to believe in your research and have high long-term conviction. That's what I did, and it's been a big winner for me. Now, right now, I view Google in the same boat as ASML. I see it as a hold/buy on dips, and that's what I've been doing. Any dips I see, I've been buying. Now, what I really like about this company is our diversification. One, everyone knows about Google search, the biggest one. Then there's the Google Cloud, which is absolutely massive. There's another one, YouTube, which is continuing to grow. Then you have other bets like Waymo. Waymo is a robo-taxi play, and they right now have over 450,000 weekly trips. No other robo-taxi in the world is doing that right now. For reference, Tesla has none right now. They're still in the testing phase. Google is dominating this space. So Google is one of those stocks that I want to continue to hold because I think they are going to continue to be a big winner for years to come. Like I said, I view it as a hold/buy on dips. Now for the next stock, we have Amazon. This one takes up 10% of my portfolio, and it's up only 6%. Now again, I mentioned I own a lot of Amazon in another portfolio, so that doesn't really showcase my conviction in the stock. First off, we have to talk about the Amazon performance. Year to date, this stock is only up about 5.5%. When you look at other big tech stocks, like we just looked at Google, it is getting crushed. Over the past 5 years, it's up 41%, where the S&P 500 is up about 87%. This stock has just done incredibly poorly and has not done that well for me. Now here's the thing. I do not expect that to last at all. I think 2026 is going to be an incredible year for this company. One of those reasons is going to be because of acceleration in AWS, their cloud computing service. One of the pushbacks you get with AWS is that Google Cloud and Microsoft's cloud are growing faster than Amazon. Now the reason for this is because of how diversified AWS is. They have over 4 million customers using their services. So when you have that many customers and you're the size they are, growth is going to be slower than the other companies. It is expected that AWS growth is going to accelerate, and when that happens, the market will react positively. Another one I want to talk about is how diversified this company is. First off, they have e-commerce. Everyone knows Amazon for their e-commerce. Next, you have advertising. Then you have subscription services, AWS, and then others. They have so many other things going on inside their business. They own so many other services. If you don't know, they own like Twitch. They have a satellite service. They have so many different things that they are doing, helping them be more diversified. Another thing I want to talk about, and it's something I covered in this video 4 months ago, it's that robotics is going to absolutely change this company forever. Right now in fulfillment centers, they have over 1 million robots running operations. Now, e-commerce is a low margin business. You're not making much profit on the sales you're making. One thing that is going to absolutely change that is robotics. Not only are they adding more and more robots into their fulfillment centers, making them more efficient, but I'm sure you guys all know they are working on humanoid robots to jump out of vehicles and deliver your packages. Now you got to think, when they are making millions and millions and millions of different deliveries each day, the money they're paying these delivery drivers is going to eat up at margins. Eventually down the road, when these humanoid robots are jumping out of vehicles, it is going to save them so much money, and their margins are going to ultimately expand. Amazon right now is a company I believe is a buy. When we go on Forecast and use a discounted cash flow calculator, they have fair value at $273 a share. Now this isn't as undervalued as an Adobe or a Duolingo, but it is certainly undervalued. It is 17% below fair value. Now the thing with Amazon, and it is such a big and established company that risk is ultimately much lower. So not only do I think the company is undervalued and will have great returns over the next few years, I also think the risk factor is much lower than a lot of other stocks you'll find. So Amazon is ultimately a buy for 2026 in my opinion. and is a stock I want to continue to build my position in. Now let's get to my last individual position, that one being Nike, taking up 5.5% of my portfolio, and it's down about 4.5%. Again, I own Nike in another portfolio, so Nike is more than 5% of my overall holdings. But ultimately, it is a stock I have extremely high conviction in. Now, I know I've said I've had high conviction for each stock I own, but that's the thing. I'm not gonna buy a company I don't heavily believe in. That's why I only own 6 individual positions, because there's only a few stocks I truly believe in. Now, about a week ago, I made this Nike video going over Q4 earnings, and then I also broke down my entire thesis. So I'd go watch that video. I'll put it up in this corner if you want to click on that. But I feel like I do a good job breaking everything down. Now, Nike looks like a dead stock, a dead company, down 57% over the past 5 years. And over the past 1 year, year to date, down 17.5%. You look at numbers and they look atrocious. Revenue is not growing. EBITDA is declining. Net income, earnings per share. This just looks like a terrible setup. Now, what we need to understand is, why is this happening? Now, one, they had a CEO from 2020 to 2024 that ultimately ran this company to the ground. He made mistake after mistake, ultimately hurting the company more than helping them. The second one is high levels of inflation in 2020. Because Nike is a consumer brand, one with price tags a little more expensive, when inflation is hurting everyone heavily, people are going to spend less money on Nike because it's not essential. Those two factors hurt the company greatly, and now they've brought in a new CEO, Elliott Hill, who's been with the company since 1988 to turn things around. Now, one of the things they had to do was start fixing all these mistakes. Because of that, things were going to have to get worse before they got better. We look at revenue, it was declining, but now with this turnaround starting to happen, Q2 was a bottom. Now we've seen 2 consecutive quarters where revenue grew slightly. That is the first sign of this turnaround starting to happen. Now, another thing that happened just a few days ago was Apple's CEO, Tim Cook, and he's also been a long-term Nike director, bought $3 million worth of shares, which doubled his personal stake. Now, this is obviously a very bullish signal, as an insider is buying and ultimately seeing the turnaround happen in front of their eyes. So that's positive. One pushback I get is valuation. Valuation is not cheap for this company. You would think after this massive drop, it would be cheaper. Well, again, as things have to get worse before they get better, we are going to see a decline in earnings per share. With earnings per share as low as it is, the price to earnings ratio isn't going to look good. That's why you have to look at the price to sales ratio, which is under 2. This tells a way better story about valuation. Now, for me, the signal I give it is Nike is a buy on continued execution. I want to see each and every quarter that this company is making more and more steps towards this turnaround. Now, with a turnaround like this, I don't expect the market to react quick. It might take another 3 months, 6 months, maybe 9 months. But eventually, I think Nike will get back towards all-time highs, and we can see the stock back in the high 150s. So that's Nike for me, a stock that I'm buying in 2026. My last position, I'll go briefly, is QQQM. This tracks the NASDAQ 100. It's only about 2.5% of my portfolio. This is a small position that I'm adding to just slightly each and every day, just dollar cost averaging. I don't intend this to become any more than 5 to 10% of my portfolio. It's really just a stabilizer, if anything. Now I want to go over my watch list. Now this video is taking much longer than I expected, so I just want to briefly cover the stocks I'm watching. Now the first one is Netflix. Now if you're active in the market, you probably know about Netflix looking to buy Warner Bros. Now the deal hasn't gone through yet, but it looks like it is going to happen. Now this is obviously a big one, bringing in more movies, more shows, higher quality stuff to the service. Now another thing I think is cool is Netflix games. Now this is actually one I played over Christmas Eve and Christmas with my family, and I thought it was cool. So how it works is you go on Netflix and they have a game section, and what you do is you take your phone, scan the QR code, and all of a sudden your phone becomes a controller. They have a bunch of different party games, individual games for you to play, and it was actually a lot of fun. I think it's a cool way to bring party games to everyone, because if you want to play the Xbox or PS5 or PC or whatever it is, you don't have all the controllers. So everyone has a phone, so if you find a way to turn the phone into a controller, it's a great way to get everyone able to play. Now we'll have to see how they scale this, how profitable is it going to be, but it made me open my eyes to Netflix is becoming more than just a place to watch movies or shows. It is trying to become a platform much bigger. Now the next stock I'm looking at is Oracle. This is one that's been recommended to me by a lot of people, and this is one that had a massive run up this year and has returned down to an average price. Now the stock is up just about 20% this year, which is actually kind of underwhelming for how well they've reported. When we look at this cloud backlog right here, they had a massive, massive spike in money after a deal with OpenAI, which is incredibly bullish, and that's what led to that that price rise. But I really want to dive deeper in this company. Is this an opportunity for the future? We'll see. Now, the last main stock on my watch list is ServiceNow. This is one that has been recommended to me a few times, especially today. I've had a few people comment on my TikTok about checking it out. But yeah, this is one I want to dive deeper into. This stock is down 27% year to date. Over the past 5 years, up only 41%. So this is what I'm gonna have to dive into and see what it's all about. Now, to end this off, this recording has gone on much longer than I expected. This is probably going to be a pretty lengthy video, but I want to say thank you. You guys have completely blown my expectations out of the water for YouTube. Now, I started taking YouTube more seriously about 6 months ago in June with this Nike video, and since then I've uploaded about 25 more videos. Especially lately, you guys the views have been great for me. I've had a lot of videos over 1,000 to 2,000, even a few with over 3,000 views. But the number one thing is my subscriber count. Hitting 1,500 before 2026 wasn't even on my mind. I think about a month ago, I talked about how I wanted to hit 1,000 before 2026, and I didn't think that would happen, let alone 1,500. That is just crazy. So really, I just want to say thank you. The support means a whole lot. Your guys' engagement, everyone that comments, likes on the video, comes back and watches each and every video. It means a lot. Now, the last thing I want to talk about is, if you haven't already, I've been using these polls. Like this one, I asked what video do you guys want to see. I had a Duolingo deep dive, an Oracle deep dive. It ended up coming out even. I made the Duolingo video. But I do some polls to figure out what you guys want to see. So always keep an eye out for any of those you see and engage when you can. Now, again, obviously this is not financial advice. I'm not a financial advisor. This is just my plans for 2026, and this is for educational purposes only. You should always do your own research before buying a stock. Now, if you like this video and stayed all the way to the end, dropping a like would be greatly appreciated. I always appreciate your support, and I'll see you in the next one.